That means a ton of cash will be rolling in. So, as I've mentioned before in each of these Friday market wraps, don't put off buying gold until Monday. This will only take around 20 minutes of your time once you finish watching it. I should have said this earlier so folks might have paused it, gotten some gold, and then returned. After all, it's evident that things will change. I lost track of time. But now that it's almost over, when you've finished viewing, subscribed to the YouTube channel, liked, and commented positively on this video, isn't it? Go to Schiff Gold and purchase some gold and silver after you've finished all those stuff, which won't take long. You are no longer need to wait. Open around the clock. Put items in your shopping cart if you like. Just give us a ring. This must be done immediately, not on Monday. On Monday morning, a significant disparity may emerge. You might as well make the purchase now while no one is looking. Before you even think about purchasing gold and silver, I urge you to listen to my whole hour-long podcast on my primary Peter Schiff YouTube channel. In it, I cover every single point I want to make on the Federal Reserve. Because when you watch it, you will want to buy even more Schiff gold from their website. I mean, why wait? Use that hour wisely. Get some now before you have to go out and get more. The precious metals markets had quite the week. Quite a bit of uncertainty was present. Wednesday was the day of the FOMC meeting and decision. Today was a very eventful market day due to the quadruple witching, which was about by the expiration of futures and options and other similar events, increased volatility. However, the overall sentiment is extremely positive for gold. Gold gained 1.1% for the week, bringing it close to a new record high. Right below 36.90, maybe even 36.85, we closed in the gold. Throughout the week, we were able to reach 3,700 multiple times, but we failed to surpass it. By Monday, I'm afraid we'll have blown past it and never looked back. Even more impressive was silver's 2.8% rise today, which negated the 1.8% weekly gain. Therefore, silver was down 1% for the week prior to today, but it closed up 1.8% due to a 2.8% move. In fact, silver ended the week at a little over $33.43. In other words, we were just about to close in on 43, after not having been there in 14 years. For some context, gold has gained 40% so far in 2025, so these gains are relative. The price of silver has increased by 48%. These gains for precious metals are just mind-blowing, especially considering how wonderful last year was too. However, the stocks of companies that mine for gold and silver are the only ones outperforming these precious metals. The GDX and the GDXJ both rose 5% today. The gold price increased by 5%, which is only 1%, or slightly more than 1%, given that it was $40, but still a significant amount. So the gold price moved 5 times as much as the gold stock market did today. Not only that, but the GDX closed at a level it has never been before, and the GDXJ is at its highest point in, 13 or 14 years. The GDX gained 3.75% for the week, while the GDXJ gained 2.2%. Barrick Gold, which rose 10% in a single day, was the day's shining star. For a corporation of such size, a 10% increase is quite unusual. Typically, you would come across a few smaller enterprises. However, when compared to, say, tech giants, all gold mining companies are rather tiny. However, when it comes to the mining industry as a whole, Barrick is second to none, second only to Newmont, which is still doing really well, having increased its share price by about 5% today. To be sure, These are all significant changes from the previous year. I thought the GDX was up 113% thus far this year, and the GDXJ was up 115%. Consequently, these stocks are outperforming tech equities. The mainstream financial media would have you believe that Apple is the best performing stock in the S&P 500, but that is not the case. Actually, the mainstream financial media barely scratched the surface of the topic of gold stocks, reaching fresh record highs today. They paid attention to the S&P setting a new record high, but that was all. Yes, the S&P 500 hit a new all-time high. The S&P 500 index has gained 13.3% so far this year. Investing in gold has resulted in a tenfold increase in value. Why is this such a major issue? What does it mean, in fact, if gold is up 40% while the S&P is up 13%? In other words, the S&P is down 27% when adjusted for inflation. When measured in terms of actual currency, this stock market is a severe bear market. However, you are receiving an erroneous viewpoint, since no one is pricing them in actual money. Instead, they are pricing them in silly money. The dollar really gained only a little ground on the week in other major markets. I believe that will turn around, although the dollar index is still quite weak. The yields on bonds were also rising. The spike in long-term rates is exactly what I predicted would happen when the Fed resumed its rate-cutting policies. At the end of the week, the 10-year yield was 4.13. It was 4.02 on Tuesday, the previous day of the rate decrease. The long end has gained approximately half of the 25 basis points that the Fed slashed. It's likely that next week it will acquire the remaining half. The 30-year yield is 4.74%. What follows is a synopsis of some of the week's most important events. Obviously, the rate cut comes first. In my Peter Schiff podcast, which I recorded after the stock market closed on Wednesday, I went into detail about the rate cut and the astounding admissions that were left out of the mainstream media's coverage of the press conference for nearly an hour. So, I'm not going to spend any time on this market wrap on the rate cut. One should not miss it. You must view it. So, if you haven't already, once you complete this video, head over to my main YouTube channel, which has little under 600,000 followers, subscribe, and watch the whole thing. The rate cuts have taken about an hour. By the way, subscribe to the Schiff Gold YouTube channel if you're watching this video. There are hardly any subscribers at this point. Compared to the number of subscribers, the amount of people seeing these videos is 2 to 3 times higher. Make sure to subscribe to the channel if you're viewing the video. Therefore, I will not be concerned with the rate cut aspect. The Federal Reserve has signaled that there will be at least 2 additional rate cuts before the year ends, which bodes well for gold prices. So optimistic, optimistic, optimistic. Thus, there is nowhere for gold but up. The only way for silver to go is up. However, before I go on, there are 3 more noteworthy news stories from this week. An example would be the interview with Stephen Moran that I saw on CNBC earlier today. In addition to his current role as a member of the FOMC, Stephen Moran formerly served as head of Trump's economic advisors. Now he's juggling 2 tasks at once, but it's more accurately described as one hat. He's got it checked and is ready to go get it. With a Trump administration official now serving on the FOMC, the Fed's independence has been severely compromised. However, there were 2 shocking remarks he made. One of his points was that, since the Fed is, in his view, far from neutral, rates should be substantially lower. In addition to his being incorrect, we are not far from neutral. In fact, we are too loose, and we are below neutral. Instead of cutting rates, the Fed should have raised them. The market is indicating that to you. The bond market's long end is telling you that. According to the gold market, such is the case. Those market signals aren't being heard by anybody. Consider the money supply. Pay attention to the current state of consumer prices. Our inflation rate is significant, at over 2% and rising. On the other hand, if you're holding US dollars instead of gold, you should be even more worried about what Moran admitted when asked about the currency. That one of the Fed's mandates is not a strong dollar and not to care about the exchange rate of the dollar. According to him, the Federal Reserve Act makes no reference to the dollar, and the decision is not made by the Fed. His statement that the President, and not the Fed, has discretion over dollar policy should strike fear into the hearts of many. After all, how can the Fed fulfill its principal objective of price stability if it is unconcerned about the value of the dollar? Since the value of the dollar determines the level of prices, maintaining a stable dollar is essential to maintaining stable prices. A depreciating currency means you'll need more money to purchase the same amount of goods. Therefore, since the Federal Reserve is required to keep prices stable, it is also required to keep the value of the US dollar stable. If you don't think the currency is part of the Federal Reserve's mandate, then you must be either ignorant or dishonest. Therefore, you can only choose between the two options. No middle ground is available. Thus, he is a member of the Federal Reserve, and the new chairman that Trump will choose will share his views. Even though he is currently serving as Secretary of the Treasury, one of the president's closest confidants or former confidants, Steve Bannon, publicly supported the nomination of Scott Bessent to the position of Federal Reserve Chairman this week. That is to say, according to Scott Bannon, the head of the Federal Reserve and the Treasurer ought to be one and the same. Depending on who's around, one individual can be seen wearing both caps.